NYSE-listed stablecoin issuer Circle recently announced a new offering. The company's chief product and technology officer, Nikhil Chandok, told Kristen Scholler how ARC, a blockchain for stablecoin finance, will be used across platforms. Take a listen.
ARC is an open layer 1 blockchain from Circle, and it is built for stablecoin finance. So let me get into a little bit of background as to why we built ARC. As you can tell, like we are at a moment in the evolution of Circle, in the evolution of this broader industry, and as we see this evolution happening over the next few years, it felt like we needed like specialized global infrastructure to help bring all of these real world assets on chain. Figure out a performant chain that can solve for real world use cases. Figure out complicated things like privacy that have been asked from enterprises who are looking to bring these assets on chain. And then doing it all in a simple manner, right? So I think like if you're using existing public blockchain infrastructure, there's a lot to understand. You have to understand validators, you have to understand gas. You have to have a way of paying fees using native tokens, and then they have a problem with accounting treatment. If you're a company that's trying to just do a transaction on public chains, like what do you do with like the tokens that have like that have volatility on your accounting book? So there's just so many problems that prevent all of these assets and all of these use cases from coming on chain. And so our point of view is like, look, we're going to go build this like layer 1 infrastructure. It's going to be open. It's going to be available to developers. It's going to be available to enterprises all around the world. And we think we can sort of expand the ecosystem and bring a ton of innovation to this space.
What gap is ARC filling in this blockchain ecosystem?
Yeah, so I think a simple way, maybe I'll start with an example. Let's say I'm a company and you have a company and I want to send you 100 USDC, and I want to do it just for this. In this example, we'll use Ethereum as an example. I'll have to have a wallet, you need to have a wallet, and I need to have Ethereum tokens. So I can't just pay the gas in USDC. So the first thing we do is we figure out a way to make it so that I don't have to have Ethereum to actually pay you, to send you the money. So that makes USDC as gas. That's step one. Second, if I want to make a payment to you and I want to keep it confidential, and it is very difficult. Right? So I think like one of the things that ARC solves is says like, look, you and I can transact. It'll be known to the world that you and I are transacting, but we can keep the amount of the transaction confidential. And in the future, we will be able to do more in terms of like the types of confidentiality and privacy that we can do.
What would you say makes ARC different, and why now?
I would say, I think that some of these things that I mentioned, like, taking a stable coin as gas and having this configurable privacy layer, having a settlement time that is truly sub-second, having guarantees around settlement, all of these things together make ARC different. And we're doing it now because it is over the next 10 years, we believe there's going to be a ton of innovation, a ton of these assets that are going to come into this space. And all of the companies that want to do that are talking to us about that right now. And so it feels like a good time to go build something like this and put it out in the market and sort of learn from the market and grow with the market over the next few years.
How does ARC fit into Circle's broader strategy?
It fits in the broader strategy in that, look, ARC is going to be a hub for USDC. There's going to be a lot of USDC on ARC, and we have the ability to move that USDC to any application on any chain instantaneously. So this fits within our multi-chain strategy. USDC is on over 20 chains today. We will keep expanding the number of chains USDC is on, and as they connect to the Circle network, they will benefit from like the liquidity, the on-off ramps, and the infrastructure that is created on ARC. So in our mind, we are growing the broader ecosystem by on-ramping a bunch of like new companies on this infrastructure and then connecting them to all these chains who are through our stablecoin network.
I see you've called ARC purpose built for stablecoin finance. What does that mean in practice?
Yeah. In practice, it means like instant finality. It means native FX markets because look, we love USDC, but the whole world runs on different kinds of currencies and like has and needs FX for like the world to trade and the world to settle trade across the board. So we have a built-in FX engine. We have the ability to do privacy. We have the ability to do capital market settlement and tokenized collateral. All of these things essentially become part of stablecoin finance, and like all of that can be done on ARC.
What more can you share about the performance specs?
Yeah, so I think I'd say two things. One is performance is sub-second, so we expect the performance to be at about like 350 milliseconds to settle the transaction. We expect initially in the early days for the chain to carry 3,000 transactions per second, which is pretty performant based on the state of the art in the market right now. And also, like we expect privacy to not be a significant hindrance to the performance. So if you and I want to transact in a private manner, we should still be able to achieve these goals or near these goals for all manners of transactions.
But who benefits the most from these improvements?
I think all of us. I think the entire financial infrastructure is going to get rebuilt over the next 10 years, 20 years timeline. I think as that financial infrastructure gets rebuilt, it'll be rebuilt much more efficiently. It'll make capital more efficient. It'll make capital velocity go up. It'll remove inefficiencies in terms of location of capital and like the need for capital. And so ARC is just a piece of that puzzle. I think we are in this amazing moment where all of this infrastructure is going to get rebuilt and all of us are going to be beneficiaries of it. In the short term, for ARC specifically, I think it's going to be the companies that decide to build on ARC, take advantage of our performant architecture, and then take advantage of the on-off ramps that we have built.
What does opt-in privacy mean in this case?
Opt-in privacy means that we can decide like what kind, like if on a transaction by transaction basis, businesses can decide whether they want the transaction should encrypt the balances, should they encrypt the transaction amounts, should they, or some other feature that is needed for privacy. But the key thing about privacy is that it has to work with compliance and security for countries around the world. So we have to have rules that allow for view keys to be created on these transactions, and we have to figure out who gets to access those view keys and under what circumstances. So all of that, like together, in my mind, is called opt-in privacy.
And how does ARC fit into the future of digital money and payments?
Yeah, I mean, I think USDC is the most trusted dollar stablecoin in the world. We aim for ARC to be the most trusted stablecoin infrastructure in the world. So we will enable on-chain FX. We will enable real-time finality, and so all of this is going to help us like reconstitute what is the internet, reconstitute what is the financial system, and build a new internet financial system from here.
Thanks, Circle Chief Product and Technology Officer Nikhil Chandak and Kristen Scholler for that interview.